Hi, everybody. Welcome to the Parallel Systems broadcast. This is our Tuesday night live stream, and this one is going to be a special Patreon Q&A session. So over the past, I would say 2 weeks, I think it's been, I've been getting a lot of questions from my patrons ready for tonight's show. So I'm excited to go through them. I've got a really good list, and my patrons are super smart people. So the questions have all been of a really high caliber. Now, there was a lot of questions about gold price manipulation, so we're going to tackle that one head on. But before we get started, just a quick hello to everyone in the live chat. We've got Justin, Brendan Serkis, B. Versin. So thank you so much for joining me, and thank you to my patrons for supporting me and enabling me to do this Q&A session. And if you would like to add some questions in the future, you can do that over on the Patreon page. I'll be taking questions ongoing, so any level of patron can ask me a question. When I do a shout out, just leave a comment and you'll be able to put a question through. And like I said, I've got a ton, so there is no way I'm going to get through them all tonight. But what I might do is I'll get through as many as I can tonight. And then I think I'm going to do a second Patreon only episode where I answer some of the other ones, particularly ones about the GT, let's call it, or the taking. I can't say the actual thing that I want to say because that word seems to get me flagged up on here. So there's a few questions on there, and I think I'll save them for the Patreon. So let's get into it. I've got so much to get through. The first question is really a synthesis of many questions about the gold price and manipulation. So I'm going to read it out to you, and then I'm going to answer this one as thoroughly as possible so I cover all angles. Okay, so the question goes like this. What are we actually looking at with the gold price? Does it reflect the manipulated paper markets? It's not moving as it should to reflect inflation, wars, and crisis. The only correlation I notice is with the dollar index. The spot price is not tracking the physical buys of central banks. Is it the only commodity with a false index? Let's take a sip of water. Okay. So let's get into this one. Let's tackle it. There's many different parts to this question. First and foremost, it says, it's not moving as it should. It's not reflecting inflation. Well, what I would say is just on that front, since 1971, it's averaged around 10 to 12% per year, depending on the currency, which roughly tracks CPI. Now, CPI is a dodgy number, and in a later question, I'm going to give you the inflation-adjusted price of gold, so look out for that one. However, it does generally track the dodgy inflation, and I think it's important just to put that out there. But let's get into this one. Firstly, are the gold prices being manipulated? Of course they're being manipulated, my friends. Absolutely, 100% they're being manipulated. Just like the news is manipulated, just like the science is manipulated, just like our food, academia, everything is being manipulated all the time. Now, when it comes to finance, anything that involves money will be manipulated by many different levels of people. There's many different players in these markets, from big to small. You've got the individual investors, and there's many stories out there. There was a guy in London, an autistic guy, who once brought down the whole New York Stock Exchange. He was spoofing the markets, and he brought a halt to trading. One single guy in his parents' bedroom, he was trading hundreds of millions of dollars in his trades, and he'd accumulated a substantial amount of money. I think he was in the millions. And he brought down the entire New York Stock Exchange. They halted trading. So even one person can manipulate the markets. But manipulation comes in many forms, and there's many levels of players. And as you go further up the food chain, you get to the commercial banks that can deal in, they can deal in hundreds of millions easily. And then, of course, you get to the biggest players of them all, which is the central banks. And manipulation really comes in two forms. You've got the outright manipulation of the numbers, and then you've got what I'd call soft manipulation, which happens through things like propaganda, by using the media to try and direct the currency flows. So, promoting one asset over another asset, hiding an asset, putting out misinformation and disinformation about an asset. And gold gets all of it. It gets it at every level. But when it comes to gold, is it more manipulated is the question we should be asking. Is it more manipulated? How is it being manipulated, and why? Those are the important parts of it, because yes, of course it's being manipulated, but is it on a scale that's greater than anything else? Again, the question Is easy to answer. Absolutely. It's absolutely. Gold is being manipulated by the biggest players in the game, and it's the most important asset for them to manipulate for reasons I'm going to get into. It's not a question of is it happening, it's a question of just how badly is the manipulation going on. Now, when it comes to gold, like I said, there's no other market, in my opinion, that's more manipulated. There are markets that are probably as manipulated, maybe the oil market to some degree, but I would say gold's even more important than that. And the reason for that is because it is money. It's the superior form of money. And in a system where we've got an entire fiat Ponzi scheme where everything is based off of fiat currencies and the global reserve is the dollar, you need to manipulate the real money price, right? For the simple fact is everything else is reflected through that. Everything is actually valued against that. So if you've got the dollar price of gold going up and up and up, what does that tell us about the dollar? Well, it tells us that they're debasing it. And you can trace the manipulation back many, many years. It's happened throughout history. It goes all the way back to when the Phoenicians were manipulating the price of gold by having silver in the east, gold in the west, and then hoarding the gold in the west and devaluing it in the east so that silver was more important, and then flipping them around. So having collected all of the gold from the east because silver was more valuable over there because they manipulated the prices down of gold in favor of silver, they would then accumulate the gold, take it to the west where it was more valuable and silver was diminished. They'd accumulate the silver in the west and then they would flip them around. So they could go now to the east with all of this gold that they'd got cheaply and sell it for a massive premium, and vice versa with the silver. That's how they were doing it, flipping it over. Now, if you go to the 1960s, we had the London gold pool. Everyone knows this story. I've spoken about it on my channel. This is where the United States got a number of central banks to manipulate the gold price to ensure it stayed at its $35 per ounce peg, which was breaking. Why was it breaking? Because they were manipulating the currencies. They were inflating the dollar, even though the dollar was meant to be backed by gold and convertible to gold. So again, it's always been important for them to manipulate the price of gold, whether that's for control and commercial profit, such as with the Phoenicians, or whether it was to stop other nations from realizing the debasement of the currency. Now, of course, post 1971, we've been supposedly on a fiat money standard. However, they have still had to keep that price of gold contained. And it's never been more easy to do this because now we've got the paper markets. You don't have to have central banks just selling gold outright into the market. Today, you can just open the market, say in London or in the Crimex in New York, and you can just sell paper contracts of, say, 400, 500 tons. Now, when they do this, it just immediately crushes the price down. But the important thing to note is that all of those paper contracts, none of them really are being redeemed in actual physical gold. In fact, only 0.4% of all of the paper contracts ever result in a physical bullion delivery. So what does that mean? Well, it means that 99.6% of all of the contracts are literally pieces of paper being traded back and forth. And the actual physical ownership of that gold is never traded over. It doesn't pass over. So the question is, does the gold even exist? Well, I would say almost undoubtedly the answer is no. There is so much gold that is being traded. Some people say it's thousands of times more gold than could exist in the vaults. And we know this because we know the actual number of ounces or tons of gold that's being mined. So if tomorrow all of those paper contracts had to be redeemed in physical metals, what would happen? Well, within about 20 minutes, they'd run out of metal. And they'd probably only be about 0.5% into the redemption of the gold contract. So there'd be millions of other contracts, or maybe hundreds of thousands, that literally had no backing. But that makes it very easy to manipulate the gold price, because if you don't have to show up the goods and deliver the physical, then of course you can just put paper contracts through. So if the gold price is rising, you just throw out some contracts for a few hundred tons, it crushes the price down. Now, of course, it's more sophisticated than that, and there's many players involved. But the reason why they do it, of course, is quite simply is to protect the fiat system. Because if people start to look at gold, if people start to realize what gold is telling them, then of course they would start to pull their money out from the fiat system. They'd no longer trust it, because gold and fiat money or fiat currency sit at very opposite ends of the spectrum. Gold is a store of value. It's intrinsically valuable because it comes from nature. So it's a store of wealth, it's intrinsically valuable, and it's a physical asset that is, in and of itself, it's hard money, it's backed, it doesn't need any counterparty to tell you it's valuable. It's just valuable because of its rarity and its difficulty in terms of getting out of the ground. Fiat money, on the other hand, has no intrinsic value, literally zero intrinsic value. It has a counterparty in that in and of itself, it is a debt note. It comes from the creation of a debt, and its only real use is if they tell you it has value and you believe it. So it requires the faith of a person. And of course, it's infinitely expandable. You can just create more and more of it. So completely opposite ends of the spectrum. And if the people are going to trust in the fiat system, you need to stop them from seeing what's on the other end of the spectrum, because that is what will expose the other. One exposes the other. Okay, let's move on a little second. I'm just going to have a drink. Okay, so clearly the price of gold rising is extremely dangerous for them and their agendas, because if the public understands what's happening with their fiat currencies, they're going to pull their money out of the system. They're going to get rid of those fiat notes that I just spoke about, and they're going to start to demand that their paper contracts are fulfilled in real money, or they're going to just simply sell them off and exchange the fiat for the real stuff and store that. So for those reasons, it has to be manipulated. And all fiat monetary systems, as we know, will eventually fail, at which point everything gets reset. And then all of a sudden, that real money becomes super important again. Now, that's going to be more, make more sense in a moment when we talk a little bit about China. And I showed all of this in a recent video as well, by the way. I did a video where I valued the S&P versus gold from the year 2000 to today, and we saw what the price increases were. And in every major Western currency, what you could see is that the gold price had gone up between 600 and 1,000% in the last 24 years, and the stock markets had gone up. Well, let's start with the UK. In the UK, it had gone up about 30% in the space of 24 years. Shocking stuff. The Nikkei had just about broken even from its all-time high in 1980. Then you had the S&P 500, which was up about 350%. You had the, who else did we look at? Oh, the European stock market, that was up a few 100%. But in every single case, gold was up at least double, sometimes treble in terms of percentage gains. So what does that tell us? Well, it tells us that the stock market gains are literally nominal gains only. What's actually happening is the currency is devaluing. Again, people don't see this because they see those nominal numbers going up. So they're not realizing that the debasement is happening. But of course, it's speeding up now. And that's why the gold price is going up faster. And that's why they're going to have to work double time to try and crush the price down. And if you look at the charts going into last Friday, what you'll see is it got to just before closing, and you see this big, massive run of red candles. I actually put it on the thumbnail for this video, and that was manipulation. It happened just before closing. They smashed the price down. Why would they do that? Well, I'm guessing some commercial banks were probably short. This is speculation. And you can see the manipulation very easily. It's not exactly hard to find. Basically, you look at the gold chart and watch the hourly candles and see overnight in the Asian markets, the gold price start to rise, and it'll go up maybe $50 to $100 overnight in Shanghai. And then as soon as the London Bullion Exchange opens, the LBMA or the Crimex in New York, you see red candles immediately smashing that price down. So that's the manipulation again. It's very easy to see it happening because there's a pattern. It happens at the same time every single day. And like I said, 0.04% of contracts get redeemed in physical. That makes it very easy to manipulate. Now, the important question is, when does this all come to an end? Because clearly, as you're getting towards the end of the financial system, remember, the fiat monetary system has to be reset at some point. And at that point, all of the financialized assets, all of the paper contracts, all of the paper, not just paper gold contracts, but the stocks, the bonds, everything that's a financialized asset will then collapse in value. You'll go into a deflationary collapse as the money collapses. And then everything gets revalued in gold, because remember, gold's been real money all along. It's only the last 50 years where we've had this aberration where they've gone to a completely fiat standard, but the gold price still matters. Why is gold still rising? Well, it's still rising because it's real money. It's being the measuring stick of the fiat currencies, which are going down, down, down. So the goal for us as investors is to recognize when we are getting towards the end game, because at that point you need to be transferring out of the paper assets and into the real money, knowing the real money is going to revalue all of those assets at a much lower price, because remember, it's all nominal gains. So in terms of, for example, the cost of an average home, in gold terms, it's not that dissimilar to where it was about 30 years ago. The prices are not actually going up in real terms, it's in nominal terms. Now you might say, well, Mike, I can't afford a house. That, what you're telling me, it's only going up nominally, but I still can't afford it. Yes, because you don't get paid in gold. You get paid in the same thing that the house is being valued in, which is the fiat currency, which is depreciating. So the inflation of the asset values is outpacing the inflation of your salary. And that is how the trick is done. That is how the cake is baked. So when is it going to end? When does the manipulation end? That's the key point. Now, I think we're getting very close to the end. I think we're heading into it. And like I said, going towards the end of the system, you need to be increasingly transferring your assets over to the real money. It's kind of like going into a famine. Going into a famine, you'd get a big store of food because there's not going to be much of it afterwards. It's the same thing now. Now, of course, you wouldn't want to get the food for the famine 20 years out, because that would be excessive and it would be maybe applying capital in an incorrect way. You'd say, no, I could do it closer to the time. So yeah, maybe you could have done better in different asset classes like 20 years ago, but actually 24 years gold has outpaced the stock market. But you could have been more speculative. Perhaps you'd have had less exposure to gold and maybe more exposure to more speculative areas if you knew what you was doing. But as you get closer, like I said, you need to start allocating more to it. Now, I think the gold price is telling us now we are getting close to the end game. We can also see that through things like war. We can see that through things like crises. All of these are symptoms of the system starting to break apart. And there's 3 reasons why I think we're going to see the end game sooner rather than later. The first one is the biggest. It's China. So since 2019, China has been essentially enacting the art of war, because what they did was they started to accumulate gold. Now, they saw what I'm telling you now. They saw that gold was the Achilles heel of their enemy, which was the US. The US has the dollar. It's inflating the dollar, but everyone is forced to save in the dollar, all of these central banks, because they need it for the oil trade, they need it for commodities. US treasuries are the most liquid market out there. So they're forced and boxed into using the dollar, but the US then gets to exploit all of these nations because they get to print the dollar. The central bank in the US, should I say, the Federal Reserve. So the US gets to export their inflation to other nations, and other nations are stuck with it. So China, what they started to do was say, right, well, we know how this is going to end, so let's accumulate the gold, which right now is being suppressed in price. So this has a dual effect. The Americans have to suppress the price. That means they're buying it on a discount because the inflation adjusted price should be far, far higher. And they started to stack it. And they went from a few thousand tons to today being the largest gold miner on planet Earth, the largest gold importer, and the largest domestic consumer. And it's reasonable to think they've probably got 30 to 40,000 tons. Now, just think about how clever that is. That every time the US now debases the dollar, which it has to do to keep the Ponzi scheme going, it not only hurts itself, it not only hurts its own economy and its own populace, but it strengthens its enemy in China, because their actual gold holdings are now revalued at a higher level in the dollar terms. So that is the art of war, is to win, it's to beat your enemy without actually facing them on the battlefield or where they are strongest. And undoubtedly, the US is strongest in the field of war. It's got more military bases than any other nation has ever had. So China's doing it economically. Academically also, in terms of technology, it's superior on most fronts. Trade as well, it's going to overtake. So it's essentially won the war without actually going to war. And the gold part is absolutely crucial. Now, that also tells us that it's becoming existential for the US, because the gold price now is a key battleground of this war. It always has been for the US. But seeing China stack so much gold, now all of a sudden they really are between a rock and a hard place. They keep inflating the dollar, it keeps strengthening China. And China's, of course, creating a new monetary system along with the BRICS nations around gold. So now you can see how gold itself is actually a tool of war. It is a key part of the war. And for every $100 that the gold price goes up, it increases China's increases the value of China's gold holdings by around $90 billion for every $100. So now you see why the US would want to manipulate those prices down, not just to keep people from looking at gold and to protect the system, but also because it's actually having this effect where it's, handing over strength economically to China. So that's one of the reasons why I think we're heading towards the end game. Another reason would be other central banks are now starting to buy gold again. So that's showing us that even they see the writing on the wall. So even though the US is the top dog and certainly leans on all of these countries, they're saying, well, listen, we need to get some gold because the lights might go out, as Adam Glapinski, the Polish central banker, said. He said, we're buying gold because the lights might go out on the global financial system. We're not predicting it, but if it does happen, then all of this paper stuff's worthless. He knows what's up, so he was buying gold for that reason. So European central banks and other central banks buying gold, that's another big warning sign that we're getting towards the end game. And the final one, which has yet to truly strike, but we're on our way there, is the public buying gold. And of course, that is another reason why they really have to manipulate the gold, not just the price, but also the public relations around it. And I showed this recently to my coaching clients that when you look on Google, if you go to Google News and type in gold, you'll find a fraction of the mainstream media news articles than you would if you typed in Bitcoin. Now, what does that tell us? Well, we know the mainstream media is manipulated, so it tells us that they really probably want to turn the spotlight away from gold onto other assets. They're not bothered about people buying Bitcoin. There's lots of articles around it, but the gold one, very, very few, despite both of them being at an all-time high. So that's quite instructive. It tells us that they are certainly managing perceptions around it. They don't want people to think about it, and they certainly don't want people to understand it, and they don't want people to see it as money in and of itself. They want you to see it as some kind of weird commodity that crazy people living in bunkers buy. But, there's all of these kind of mythological stories around it. They call people gold bugs. It's all derogatory stuff, but it's managing perceptions. Now, when it comes to why the price is breaking out now, well, like I said, China's buying an awful lot of it. They're really heavyweights, so you can manipulate the markets for so long. But when you get a heavyweight like China buying so much, and now we've got the Shanghai Gold Exchange, which still only counts for a fraction of gold contracts. It's about 5%, I think. The rest of it's all in London. It's like 90% in London, some in the Crimex, and then a tiny percentage in Shanghai. But nearly all of those contracts on Shanghai are going to have physical involved. Lots of them are actually being delivered in physical bullion. So that's drawing all of this metal out of the markets, and it's really going to expose those paper markets too. So it's the perfect trap now that China has the US in. It's the perfect trap because by accumulating all of this gold, they really are helping to speed up the end of the system, the demise of the old system. They're allowing the price to find a truer level, although it's still, like I said, a long way off. And the US is kind of helpless. All they can do is revert to what they have left, the only tools they have left, which undoubtedly is war. And that is why we are seeing lots of war. So going back to the question, is it manipulated? You betcha. You betcha it's still manipulated. It's manipulated the hell out of. And does it reflect the real price? No, it doesn't. And when does it end? Well, it ends soon. It ends when the system has to be reset. When it has to be reset, it gets reset against what? There's only one thing you can reset it against. It's a real thing, which is gold. So that's where we're heading into. I saw this many years ago, and it's all playing out just like I expected. It's wild to live through, but there you go. Okay, the next question, and let's just take a break. Let's see who's in the chat. Somebody said it. Your live stream is being manipulated, it seems. I hope not. Yeah, I hope it's not. If it's not working so well, then apologies. I'll have to have a look afterwards and see what's going on. So I hope this one's coming through. If not, then I'll do it again. We'll go round for round two. Okay, chart related. The next one was a chart that I shared with my patrons. I don't have it to hand, but it was showing the inflation adjusted gold price. Now you have to remember that the gold price that we see today is, well, it's valued in fiat money first and foremost, like I just said. And the inflation metrics that we look at, the CPI, they are completely cooked. So the CPI metrics that we use today are nothing like the ones we used in 1980s. So on my chart, what I showed my patrons, it showed us that the gold price today using the old inflation metrics was around $14,000. It's actually incorrect, that chart. It's actually around $24,000. And I'm talking about the all-time high in gold, which was 1980, $850. $850 in 1980 using the old CPI would today be around 24. It might actually be 26,000, but it's around 24, let's just say. And that shows us, of course, that gold has never been cheaper if we are using the old metrics. So that's an interesting thing, because people often say, is the gold price, is it too high? Should I be buying at these levels? Ultimately, it's never been cheaper. Of course, it doesn't feel that way to us because our currency is being debased, so we're getting paid less and less. Now, I'm not saying that in 1980 gold wasn't overvalued. It probably was overvalued for the price, for the time in history in 1980. It definitely run up very high, and it was probably overvalued at the time. But that doesn't mean today that gold shouldn't be 24k. There's many reasons you could argue why it should be something around those levels, because let's face it, if you're going into a currency reset where everything gets revalued in that one asset, which is what's going to happen, that's why China's bought up all the gold, that's why the BRICS nations are mining and storing all this gold, then what's gold worth when all of the financialized assets are going to fail in the collapse? All of the contracts are going to be reneged on. All of the counterparties are going to fail. All of the currencies are going to go. They're going to go to zero potentially. We don't know. We don't know how bad it gets, but we know it's going to be pretty damn bad because they've hyperinflated everything. And even if they didn't, we're just going to a great deflationary crash. Remember, all of these artificially high prices would then have to deflate, because people wouldn't be able to sustain those prices without this debt-fueled system. So you'd have houses go down 80-90%. You'd have the stock market down 90-95%. Fine wine, cars, arts, watches, you name it, they'd all massively collapse. So even if gold just stayed static, it would buy you 10 times more things after the deflationary bust. But it's way worse than that, because it's not just a deflationary bust, it's a complete reset, because a deflationary bust bankrupts the entire system because there's so much debt. So now everything has to be revalued consciously in gold whilst all those other assets collapse. So you can see the kind of conundrum that they're in. It's like, how do we fix this? What are we going to do? CBDCs? We don't know. They have no idea. And that's where we are, right? So how much should gold be valued at today? Well, in the current system, yeah, okay, it should be much higher, but it doesn't really matter, because there's another system that has to come after this, and gold's already being put forward as the key asset, which it had to be because it's real money. And that's the really important thing for people to understand, right? You have to understand what it is and why it's important. It's not a speculation. It's not even an investment. It's money, period. You can speculate and you can use it in different ways through miners, gold and silver miners and all that stuff. But it's fundamentally a very different kind of asset to silver even, or Bitcoin and cryptos, or stocks and shares, or oil. All those other things are in a different category, and that's just the way it is. So for people asking if gold's expensive now, no, I don't think it is. It's actually never been cheaper, inflation adjusted. It's not an all-time high. Just the same way the Nikkei's not at an all-time high. The FTSE 100 is not at an all-time high. These are all nominal all-time highs. Inflation adjusted, they're all actually collapsing in value. How can you have an all-time high in the Nikkei when the last all-time high was 1980 and we've just gone above that? If you think about that, we're like, all these years later, there is no way that the nominal number now is the same as the nominal number back in the 1980s. And you can see that because the gold price in the Japanese yen is up from there. I don't know, we're up like 1,300-400%. God knows that currency is collapsing. So the reason everything feels so expensive right now is just because our real salaries are collapsing, our currencies are declining, and of course we're getting towards that phase now where it starts to steepen. Once you get over 4% inflation, you are more likely to go to 10% than you are back down to 2%. And we're seeing that play out in real time. Once you get over 50% inflation, you're almost certain to go on to hyperinflation. Now, you might say, well, 50% sounds like a lot, but it's the doubling time that you need to look at. We was around 40% in Great Britain the other year. Officially, they said 10%. I calculated it around 30% to 40% at certain times. And once you're at 25%, it only has to go up one more time to get to 50%. Just think about it. We went from 2% to 4% to 8% to 16%. So the double was happening. It only needs to double once more from 25 to get to the 50. It's the doubling time that really counts with inflation. It's the rate of change you have to look at. Okay, so that was the chart that people were talking about, and people asked me to explain it. So there you go. That's the explainer. And somebody else said from the chart, it looks like silver is a better return and therefore a better purchase option than gold, particularly as it isn't likely to be confiscated. Is that correct? Well, the silver versus gold thing, it's not quite so simple, actually. There's many different things to think about. The different metals, and they have different characteristics that you need to know about. They respond very differently. I was actually listening to Palisades Gold Radio today, and Tom asked one of the guests, he said, is silver the same as buying gold? Is it the same investment in your opinion? And he said yes. And as I was driving, I was like, how can you say yes? It's a completely different metal. In, let's say, 2008, for example, in the 2008 crash, gold was up 5% for the year, despite one of the biggest stock market crashes in our lifetimes, and silver was down almost 60%. So how can gold be up 5% and silver down nearly 60%? Doesn't make sense if you're saying they're the same metal. Of course, they're not the same metal. That's because silver is an industrial metal and gold is money. It's the wealth preserver. So the reason gold went down, of course, is the paper markets did sell, but people were also simultaneously rushing into the physical metal because people realized that underneath Exeter's pyramid, that is where you have gold. Silver is very important. It's a fantastic metal, but it's not the same. And you have to understand, in this current Ponzi system, it's certainly not the same because it has the industrial component. In the next system, it's not going to be the same because they're not using silver as the monetary metal. They're not using it to back the system. It's going to remain an industrial metal with a secondary use, which will be monetarily used for people like us. We might use it ourselves in barter and trade. People will use it as a store of value as the current system starts to come down. But in terms of the actual official monetary system, it's not going to be used in that way. So you have to understand it is different. It's bulkier. It's harder to store. It's harder to buy at spot. You've got to pay. I was looking today, it was $5.50 over spot to buy silver. So that means as soon as you buy an ounce of silver, you're already down about 25% on your investment. In the UK, it can be even more because of VAT. So yeah, a very different prospect. It's not as liquid. When you sell it, you have to sell it for spot. So you buy it for, 20% above spot, then you have to sell it at spot. So all of these things make it very different. And if you want to buy a wealth preserver, it has to be gold. But you also need silver. You need junk silver and silver for trade and barter. And also because, it will have times where it really outperforms. It can go like a rocket. Its volatility is much higher. I think silver is really good for increasing wealth, particularly the miners, if you know how to play those cycles. And that can be a really good way of compounding ounces. So love silver. It's one of my favorite metals, but it's not the same. And in terms of it not being confiscated, I don't really worry about that side of things too much. In a dying system, they could try and take anything, ultimately. It's like a drowning man, right? A drowning man, they say, don't go near a drowning man because he tries to pull everything down. It's the same with this system. Don't go near the drowning man. Get as far away from him as you can. He's not going to accept any help. He's going to pull you under with him. And with silver, I think, you have to be aware that even in the 1933 confiscation, a year later, they came after the silver too. Nobody talks about that. There was another executive order for silver. So, it's not necessarily not going to be attempted to be confiscated, but of course you have to comply with that, and if you do, that's your choice. Another question, what would need to happen in the world or current markets for silver and gold to get to the prices shown on the charts, which was the inflation-adjusted ones? Well, I told you a few of them, for example. One would be for this current system to start to really come apart, which I think we're watching in real time now. We're actually living through it. We're seeing it. We're kind of, I guess, saturated in it because we live in the world, so we accept the abnormal as normal. We see all of these things happening. But in real time, we are seeing these markets fall apart and break. It doesn't mean it's going to happen overnight. It could go on for many, many years yet. So I wouldn't say it's going to happen tomorrow, but I think ultimately there is no other way but for the system to come apart or be reset in some shape or form, which will be hugely bullish for gold. So at that point, you could see it. Or it could be that it dies. It could be that the current system dies in and of itself, and we just see a revaluation again and again and again going into the end game. So you might see those prices come much sooner before the system ever is reset. Where are we now? We're at $2,400, say, for gold. What is it now to get to 3,000? It's going to be another 30%. That's nothing. You see You see companies go up 30% all the time. We saw rhodium go up 1,500% in the 2015 to 2000 period. You know, it can happen. Commodities go up all the time. The thing with gold is there's two reasons for it to go up. One of them is that it's going to be the new money. It's going to be old money. It's going to be put back where it always has been, in my opinion, which is as money. And the other one is demand. Demand can also spike, and demand is going to spike as people start to realize what's happening. What I'm telling you is happening with the paper assets, which you can see yourself by just valuing things in gold and looking at the stock market in gold. You can see how the trick's being done, how the con's working, which is the devaluation of currencies. And as people start to see that, some of them are going to say, okay, I'm going to go back to storing some of my wealth in something that has zero counterparty risk. Now, a lot of people will go to Bitcoin too. In fact, I think that's going to be a key tool, is to get people to go there. I think it's easy to control people in that one. So we might see that one too. Somebody else said the above chart prices are based on the true price adjusted for inflation, but how would the BRICS using gold-backed currencies affect this price? Could gold and silver be worth even more? Yeah, of course, because, you know, if you're a Western nation, if you're Poland with 300 tons, if you're the Czech Republic with, I think it's 200 tons, or Hungary with a few hundred tons, if you're Canada with 0 tons, then what are you going to do? You're going to, first and foremost, try and get those pieces of gold. So Canada might confiscate, for example, or try to. And the nations that do have gold and know they're not going to get away with confiscation, because, listen, nobody's going to abide by it in an end game. That's just a fantasy. It's going to be a case of the people who are in a slave mindset, I would say. You know, there's a lot of people out there today who have a slave mindset, in my opinion. It's like as soon as somebody says, you must do this, they're going to say, okay, I'll do it. We've seen this the last few years. So, you know, it's a choice. Do you want to be a slave? Do you want to be a cook? Or do you want to actually, you know, look after yourself and your family and think for oneself? Because, you know, if you're going to get financially destroyed, then you're essentially giving up. You know, you're choosing self-destruction. Well, it's not a good place to be, my friends, but some people will do that. But for the rest of the people, they're going to be fine. And what's going to happen is there will be a vested interest internationally to revalue gold at a much higher level. Now, like I said, it will already happen, in my opinion, by default, de facto, a revaluation, because all of the other assets will collapse in a deflationary bust after the currencies start to fall. And then, of course, you're in something that just remains stable, so you'll be able to buy much more. But I think there'll be an invested interest in revaluation. Why do I think that? Because a lot of nations are not going to be able to pay their debts. They're not going to be able to do trade. If you think of all these BRICS nations, right? You've got Chile, you've got Mexico, you've got Brazil, you've got Argentina, you've got South Africa and all these other African nations, China, Russia. All of them commodity producers, all of them are going to essentially hold the keys to the shop. Okay, somebody said, what's the best place for getting objective facts about the mining companies that are actually mining and not just exploring? Well, with mining companies, it's a dirty business. You have to go through a process. You have to have a good process for analyzing them, a good one. And it begins with independent research first and foremost. So for mining companies, the way I do it is I have my macro thesis as to what's happening. I just spoke a lot about it. I tried to lay out what I think is happening in the world, why it's happening, what we're living through. So once you've done that, then you analyze the markets. You find the companies that are going to play that narrative. So like I said, with fertilizer. And then you look into the company itself. You go look through their investor presentations. You look back at their charts historically. And then after that, you have to do a valuation. You have to value the companies. So you have to do that independent research. You know, if I go online and just look at what the company tells me, it's like going on a first date, right? The company is going to be telling me all the good stuff. They're going to be, you know, having all of the good talk and looking nice and dandy. But, you know, you've got to really get to know that company and figure it out for yourself. Then you look behind the curtain. How do they behave in times of trouble? What's the management like as well? What's the... what are their operations like? Are they in a dangerous district in the world or jurisdiction? You know, if you've got mines all over Africa, then that might not be a good company to invest in, because those mines could get expropriated, or they could have armed mobs storming them. This has all happened in mining history. What's your personal investment strategy? Well, I just laid that out above, but essentially it's based on classic value investing, so knowing how to value companies, but used in a strategic way around the financial reset, de-risking positions as you go into profit, and I focus almost exclusively on gold and silver miners and commodity companies and riding those respective cycles, and that's what I teach to my group coaching, and we have our private investors club also, where after they've been through the coaching, we all sit down together and we discussed the opportunities, and I just put some out this month. We were talking about lithium actually. So yeah, that's the way to do this. You've got to be very smart, very strategic, but you can come through this and yeah, invest for the reset is what I say. Okay, I'm going to take a pause. Okay, we've got quite a few people in tonight, so thank you all for joining us. Hey Mike, in my opinion, reset occurs before USA elections in November. Well, that's the scary thing, isn't it? It could happen at any time. It could happen tomorrow. It could happen in 4 years. It could happen in 10 years. We just don't know. We don't know how this one unfolds. And that's why you really have to be, you always have to have that position of safety and kind of be prepared that if it does go pear-shaped, that you've got something secured. Hopefully you've gone heavy towards that. And you've taken yourself out of financialized assets somewhat. But like I said, there are still big opportunities there, so it's difficult. You have to know what you're doing, I guess, if you want to speculate and just do your best with it. 99.6% is just paper. Had a meeting behind on stream. Yeah, 99.6%, that's correct. Don't forget to call it the Greta, the Greta tacking. Should I cash my gold for potatoes yet, or melt it down and make tiny potato statues for my desk? Yeah, well, if you ever have to get to the point where you're trading in the gold for potatoes, you'll be glad that you had it because you're getting the potatoes, but that's a bad time. That's a really bad time. Kinesis video says the gold floor is set. Central banks on COMEX bidding for delivery listen, I'm not interested in Kinesis. 75% of the population can't think beyond their next toilet visit. They will drag the rest of us off the cliff. Not me. I'm not going off with them. You want to get away from the cliff dragging sort. Otherwise, you might get dragged inadvertently. But, I'm not a fatalist. I think I control my own destiny, and I certainly ain't trusting my destiny to these people. BM miners, in my opinion, Dave Kranzler for $20 a month is excellent. Bank showed up at my house today. I rent with a court summons for my landlord. This happened to my next door neighbor 1 month ago. People are going broke. Yeah, I know that's happening a lot too. I know a lot of businesses are failing. People who are over leveraged, they're all going to go in the next wave of bankruptcies. It's going to be lots of small, medium-sized businesses. Most people don't have more than a few months' savings in the bank, and they're living way beyond the means. So it's going to be an absolute shit show. And yeah, what can you do? Just got to take care of yourself in this one. What can we do with our company pensions? I don't know. Make a few 100% on them and then cash them in with the penalty, which at that point you won't care about because you'll have taken a few 100% extra on top of it, and then you cash it in, and it doesn't matter. That's what I'd be aiming to do. Or lose it all in the next crisis and accept the CBDC replacement, which may happen. It will either all go because they're all going to wind up going bankrupt. So you'll either lose it all or there will be some replacement. That's my honest opinion. Could be wrong. Maybe you're going to get it. Maybe it'll be worth a fortune. But I've shown many times on the broadcast that over the last few years, people's pensions have literally lost 20 years worth of gains in the space of a year. So if that doesn't tell you what's coming, nothing will. And yeah, and also you need to think about your age too. If you're in your 30s, then just write it off. You're not getting it. It's not happening. It's not coming. I wouldn't take it too seriously. I told my wife about half a decade ago, maybe about 6 or 7 years ago, perhaps. I told her, the pensions, you're not seeing it, So we better make enough wealth so we don't have to depend on it. And that's the reality. If you're in your 70s and you're close to it, then, you've got a chance of getting it out there. So I'd be looking to do that. If you are younger, then self-invested pension is the best you can do. And then use some of the opportunities as it comes and goes. Like, for example, when oil went down to, it went negative in the futures market, and people were saying, oh my God, oil's never going to come back. And, this is the market. They go from extreme optimism to extreme terror. And of course, it's always nonsense. The wrong there and the wrong there. And you have to understand these swings. But when it went down so low, and you had oil companies at decade lows, and it was clear that there was going to be huge inflation from all of the money from COVID. So then, of course, that inflation was going to go straight to the oil price. So it was obvious what was going to happen. So at that time, you could have put all of your pension fund into oil stocks and, maybe made 100% in a year and doubled it. And then you might have said, okay, well, I've done that. Now I can take a 40% hit on it because I've got more than I had even a year ago when I first considered taking it out. So those are ideas as to what you could do. But ultimately, you have to be careful with those company pensions. And I wouldn't bank on them being there. I'd be looking at how you can maybe set yourself up so you're not going to be so dependent on them in coming years. Downsize your life, get some land, take back control over your costs. So when it comes to water, energy, electricity, all those things, if you can start to bring them in-house so you're not exposed to inflation, then you'll have a much more resilient future no matter what happens financially. You don't need a lot of money to live like that. I was speaking to somebody just yesterday for my podcast, really lovely lady, but she wasn't wealthy. She'd moved out to Colorado, got herself a bit of land. She had a little bit of good fortune, not much. She had maybe 10 grand that she managed to scrape together, got helped out a little bit, bought some land. And now she lives out there really simply with some goats, does a few odd jobs, sells some sage, sells some goat's milk and cheese, living the simple life and very resilient. And I'm sure no matter what happens, that person will survive because she's got adaptability, which is something most people don't have. Most people are missing the key skills that they need to survive hard times. To survive hard times, you don't need money. You need to be resilient. You need to be intuitive. You need to be tough. You need to be psychologically and mentally tough for sure. Physically, you want to be in good shape if you can be as well. If you're not physically in shape, it's going to be a rough deal. You need to be good at risk management. I'm not talking about financial markets here. I'm talking about life. You need to be aware of what's going on and to see problems before they arise. And those are all the things that, you can't buy. I'd rather be poor and have those things and have zero money, 0 pence, and 0 land even, than have all of that stuff but be useless when it comes to adaptability and resiliency. Because, I always say, like, if you take a resilient person who's adaptable and has smarts, street smarts, you could drop them in any country on planet Earth and they'd figure out a way. But if you don't have those things, you can drop somebody in a country, but if you're going through some kind of currency collapse or hyperinflation, your money's not going to save you. And I think there's going to be a lot of people who were rich in the old world who are poor in the new world, and they'll sink. And that's a scary thing to think about for I'm sure for some people. But there's still time to get yourselves ready. And I'm not here to shock people or scare people. I'm just saying, I've studied a lot of these times in history, and ultimately, adaptability is going to be absolutely critical. Okay, I think we're going to leave it there for this one because we are well into it. P.S. Thank you for the donation. He said, "Is David Webb moving to Tennessee? Is it a good idea?" I don't know. He'll have to announce that one for himself if he is. I know he was out there recently. I spoke to him just afterwards, but I'm not sure if he's moving there. Bank showed up at my house today. Oh, I read that one. Hi, Mike. I've just read How to Earn the World by Andrew Craig. Do you think it's a good time to implement the ideas in the book? Many thanks. No, unfortunately, when it comes to books like that, I've got a load of books on my shelf. They're fantastic books, but you have to adapt them to the environment that we're in, right? So the world's changed a lot since that book was released. What he would do in that book, he would advocate that you allocate so much each month to cash until you've got a 3-month buffer, then no more to cash, so much each month to gold, so much to the stock market, so much to international equities, Asian equities, American equities, whatever. And I'm not sure if he mentions bonds in that book, but you don't want to be in bonds at all, 0, because bonds are trash. And of course, you're going to lose all your money in bonds. That's how these pension funds are blowing up. Gold, fantastic. Yeah, that's a great idea. He's one of the only books out there that recommends a 20% allocation to gold. So he was really smart on that one. But in terms of the stock market, you want to be really strategic, I think, going forward with the stock market. You want to be in spaces that are going to do well with currency debasement. So that's commodities. The 1970s commodities were up 750%, but certain commodities went up way, way higher than that. But do you want to be buy and hold? Do you want to be in the markets for the next 5 years? Probably not. That's not the timeline you want to look at. So again, it needs to be that strategic play for a reset where you're in at the right time when you've got a good margin in the safety and it looks like you've got a bit of a clear outlook ahead of you. In good companies that are low value but have the potential for really outsized returns. And you need to just figure out how your strategy is going to be. And if you can't do that, if you don't feel you can do that, then I think you do probably need to be in more stable assets that will just have that no counterparty risk and protections. Wealth preservation, of course, is critical. So I'd stick then, therefore, to, you could just be somebody who's like gold, silver, bit of Bitcoin, if that's what you're into, and bullets. And that's me, I'm out, And like I said, I don't think that's the smartest way necessarily to do it, but it might be for some people. But I think there are better ways to do it if you're willing to kind of take on a small bit of speculative risk, because those opportunities will come and then they will be capitalized upon and then they will go and then another one will arise just after it and you can take advantage. We discussed silver miners back in March in my Patreon newsletter. I told people, if you want allocation right now in the stock market, stay away from Nvidia. I said go to the silver miners now. I said they're at the lowest valuations they've been in about a decade. So you buy them now. Nobody can guarantee anything. You can't foresee the future. But if you want good value and if you want potentially outsized returns, that's the place to be now. A month later, all of those miners that we were discussing were up 70, 80%. Right now, you could be up 80%. You could just take your money and say, that's it. 1 month exposure to the markets. You've got the gains that would take most fund managers 8-10 years to get these days. And there you go. You're done. Out. Now you would convert it all to metals and you're up in your metals position, maybe 10, 20 ounces. Simple. Okay, maybe not simple, but, these are the opportunities that are there. Okay, everyone, I'm going to leave it there for this one. I do have, maybe about half a dozen more questions, and I think I'm going to save them for another one. I might put some out on Patreon this week, so I might do another live stream. Just a quick reminder, we have investors coaching coming up in June. So we've had 2 groups so far. We're on our 2nd group now. It's going fantastic. Everyone who finishes the 12 weeks of group coaching, then we go on to actually working together for the remainder of the year. So that's another 9 months where we have our investor mastermind. We have my private community. We've got a special space for investors where it's got our workshops, including one with David Webb about investing through the great taking. I put loads on there. I also put what I'm buying, when I'm buying it, what price levels I'm looking at. We recently looked at lithium. Lithium's doing really badly, which is fantastic for people who want to invest in it because it means that these companies are crushed. And that's what we're doing ongoing. So if you're interested in some of my ideas, you can check that out. Also, of course, I've got the Patreon, which is where these fantastic questions came from. So a big thank you to them. And thank you to everyone who was in the live chat. I really appreciated it. Some good comments and talk out there as usual. So thank you all for listening. Take care of yourselves, and I'll see each and every one of you in the next one.